Hi, Warriors. How's everyone doing? Breaking news. The FX arena is quiet, but Blake promises more volatility in July. So we have 20 days left. It'll start tomorrow, buddy.
Hey,
Uh,
that's right. Tomorrow's
huh?
CPI. That's what
Yeah,
everybody's waiting for.
yeah. Hi, Sinatra. How are you, AJ? Hey, Ronald, thanks for dropping in to see how we're doing. Mike, Ryan, Blake, Brand, he's on his phone. George, James. All right. So not much of a bounce so far in the dollar. EG continues to work for the team. See if it can accelerate. It's trying to put in some kind of little reversal candle here, but pretty far away from that 85 level. Why don't I start off? Good morning, Ryan. How are you?
Morning, Dale. I'm good, thank you. Hope you are too.
I am. Thanks for asking. My trading warrior brother. So Euro still underperforming, but it doesn't look like a short to me. Maybe if we get a stronger inflation number, maybe we get like ABC. But 780 looks like it's going to be a pretty important number. Prior high here.
Yeah.
Your take?
We're doing a bit of treading water, unfortunately, at the moment.
Yeah,
But that in itself, you need to be careful about. We've seen some tight ranges, but that means when things do move, they're going to move. So you just need to be careful. And there's always opportunities when you get lower liquidity or lower volatility like this. You've got to practice patience, pick your levels that you want to
yep,
trade. You've got your 17.8, 107.80 there.
yeah,
Are you going to do anything here? Or are you going to wait for your level? And you don't want to be chasing a trade. I know you're not a chaser,
yeah,
Dale.
yeah. Trouble finds me. I don't have to run after it.
Yeah,
All
that's
right,
true
so
enough, isn't it?
I could just stand still and it'll find me.
Yeah,
So cable, second lower high here. Maybe some downside. The support is a bit lower. I mean, this was kind of the key level that it got through 2720. I don't know if we're going to get that deep. Aussie still continues to, hold up.
yeah,
Reminds me on a smaller scale of what we're doing here, what we're doing now. Just a high level consolidation, but you know, I wouldn't add here just in case we get some type of above expectation inflation number. 67 to 680 looks like a good zone. And I guess
yeah.
the big question today is, does the yen have enough to make new highs, or is this a failing rally here?
Yeah, that's going to be interesting because there's been a bit of a break in yen pairs again. If you look at Aussie yen, that broke through its short term highs, making new highs. I think there's a bit of a drag on some of these pairs. We got sort of two forces. We've got this sort of modest dollar weakness and dollar bearish sentiment, and then we've got yen weakening, which is keeping pairs up on the other side. So
Right.
some of these majors are sort of caught in the current between what's going on in the dollar and what's going on in the yen at the moment.
Okay. Um, well, I tell you what, we know one thing for sure in the gold. Look how many tests we've had of this breakout line. All right, you could say this was one, this was one, this was one, and then yesterday, and
Yeah,
it launched off of this breakout. So anyway, if you're long gold, you know where you should get out of the way, right?
exactly.
Back under the breakout at 2350, and I don't know, maybe we're just going to blow to new highs tomorrow. I thought that there was a chance for us to negate the breakout. I'm not as confident about that now going into the numbers. Um, Silver, you know, not quite as much. And here's the gold silver ratio. Is it flagging or basing? I don't know, but just like everything else, I went short the gold silver ratio here, maybe up here. So everything's kind of away from me.
Yeah.
Yields, not much of a bounce. It certainly didn't hold. I think this was Friday. And again, the key area is all the way down here at
Yeah,
420.
that's going to be a big one tomorrow.
Yeah, and I was just gonna say, I was gonna add that if you look at the ZNs, which is obviously the
The
you know
notes.
the actual notes, they are
Yeah.
threatening to break out, and I mean that it could be a really big, I mean that could be on a CPI miss, which the market's expecting a little bit of a tick up on month to month. Correct me if I'm wrong, Ryan, here on, it's just off the top of my head really quick without looking. Um, if that doesn't happen, I mean, the 10-year could really break out and yields could fall quite dramatically, I would think. Do you agree with that?
Yeah, I'm just looking at the numbers now. Yeah, it's expected up 0.1%. I think the year on year is going to make all the difference there. That's expected to come down to 3.1 from 3.3. The core is actually expected to stay unchanged. So, yeah, really, the Fed want to see CPI coming down. I think if we get CPI with a 2 handle on it, that will be significant because CPI has been above 3% for over a year now, after dropping off those highs. So that would indicate further progress. But any stickiness, I don't think doves are going to like it. So we'll probably see those yields bounce a bit and dollar rallying again.
Okay, we'll see, because 420 Blake is this descending triangle. It's 70 bips. So, that gives you 350 under
Yeah.
420 for a measured move if you take it from here to here. So held here, breakdown under 420 is the way it looks to me. Pretty classic Edwards and McGee descending triangle formation there. And I have another breaking news. The S&Ps are making new contract highs.
No.
Breaking news.
That's
Breaking
every day's
news.
breaking news.
Yeah, breaking. Who's still left at short? Same thing happening here in Nasdaq. The outlier is the Dow. Kind of failed from a little over like 39.9 it got up to. So are we going to see 40,000? Can the Nasdaq and S&P drag it up there? We'll see, but definitely a laggard. And Blake, I was thinking about guys like Tom Lee and David Hunter, and these guys coming into the beginning of the year, which is, here. We had this nice old rally in Russell,
Yeah.
and they were talking about it doubling or going up 50%. Maybe, if the S&Ps go to 6,000, we could finally get a breakout in Russell. But, this has to be a disappointment to people.
Was it David
Yeah,
Hunter that said 6K?
What's that?
Was it David Hunter that said 6K beginning of
He's
the year?
saying 7.
7. I thought it was 6 at the
He
start.
raised it. Yeah, he raised it about, I don't know, 4 months ago.
Well, you got to hand it to him, because when we were trading at we were
4,300.
yeah, I mean, and he was talking that
Yeah.
we were even below 4,300. I want to
Yeah.
correct me if I'm wrong. We were down like
38.
4,000, 3,800. And
Yeah.
he's like, the market's going to new highs and we're going to rally. And I'm like, I don't know. I
Yeah.
didn't think that would happen. And I
Yeah.
think this market's done more, now obviously it's just led by a few names. So, you can call, S&P at 6,000, but the same guys, Tom Lee would be included in this camp. They also thought the Russell 2000 or it'd be a broad-based participation rally, which it hasn't been.
Yeah.
So
Yeah.
I think most people have been wrong on that front.
Yeah.
Right.
So I was making that joke about some analysts saying they weren't going to cover the NASDAQ or S&Ps because it's not representative of the market. And then a friend of mine actually sent me an article about that people are, saying it's hard to measure the market just based upon what the S&P and NASDAQ are doing. So most people aren't just in that, unless they're in SPYs, or Qs and just sitting with them. Congratulations to them. I'm really surprised we're not at 12, because I started looking at VIX and was thinking there was a shot, but I went in early here just in case it doesn't come down here. But we've tacked on, I don't know, 80 handles or so in the S&Ps since here, and I'm kind of surprised we're not down here yet. Maybe people are buying a little protection. Maybe it's still going to get there when we're at 6,000 S&Ps, but they've been stubborn. It's not a bullish chart, and if you're looking at it, you have to cover up the title, or you would never touch it. So pretend it's a tech stock that's undervalued. You say the word VIX, and it's sacrilegious in the market. Now you get a red card.
There
If
must
you
be
talk
some.
about, huh?
There must be some heavy option activity down there, because it hasn't. If you zoom out a bit, it hasn't gone below that 12 for
Oh,
months and months and months and months and months. Just
yeah, all the
can't.
way back here. So that was
Further up even as well.
December of 23. We're at 4,400 about in the S&Ps. So yeah, good point. So that's it. Those are the things I'm looking at. I was looking at Noke, and Noke is having a pretty good day.
Yeah,
In
that
this
was
range.
that Norway's inflation was it came down quite aggressively, Ryan, right?
Yeah, big steep drops for both core and headline inflation there. So that's why Knox responded to that. Potentially
All right.
pushes the Norges closer to cuts, and no one's far away from cuts, as we saw from the RBNZ last night as well. They had a little flip flop. Hawkish last month, more dovish this month. So none of them know what they're doing.
It really is pretty confusing. I think this is a pretty important area in WTI between here and 80.
Yeah.
I know a lot of guys that were bearish up here, and they're looking for new lows. I don't know. I just have a hard time being short crude because of just one event that could happen in the Gulf, and overnight you're buried. So I'm avoiding trading it. I would only trade it from the long side because of that.
Tom says, Dale, you're fading in and out. Are you moving your microphone,
Oh no.
much?
How
Oh,
about now,
okay.
Tom? How am I doing now?
All good.
That sounds good.
Good. Okay. So let's see what you see, Blake.
All right, let's do it. So I think what we should do is let's actually start off with the US dollar Norwegian krona really fast. And I think that is such a key, key move here that you're seeing the US dollar Norwegian krona. We're trading right at resistance right now. We're closing in on 1075, and when I see moves like this is kind of like what I was saying with Ryan yesterday. Ryan, I was hoping so much. I know I'm glad that you're on the right side of the dollar Canadian, but this is a very similar situation that we were talking about yesterday. I was really hoping that we would see a break just above those highs, just enough to stop out some people in the dollar CAD and reach the 38% retracement, and then roll over, because it's that kind of market. It's a real quiet market where you might get just enough to get some stops out of the way, and see a bit of a reversal, right? That's the kind of market we're in because it's very low liquidity. So I was looking at the same thing with the US dollar Norwegian krona. I was maybe hoping today that we see a move like this, above these highs. I don't know if I would necessarily sell the US dollar Norwegian krona, just because I'm trying not to trade much right now because I know that the liquidity factor is there. But knowing tomorrow's inflation data is coming out here in the US, I think that there is a little bit of a risk that inflation comes in below expectations. Everybody's bracing for a bit of a, I would say a bit of a stronger number overall. The year on year is going to be weaker, but a tick up on month. But if inflation comes in a little weaker, I think that's what's going to trigger some of the moves tomorrow. What do you think? As far as what's going to trigger the moves, and what do you think is going to and this I'm going to pass it over to you, Ryan. What do you think is going to stop this the stock market? Because the equity markets, they're obviously, I think we see inflation coming down, but if it's a tick higher of inflation, is that going to have a negative effect on equities, or do you think that inflation, moving lower? I mean, I don't know. What are your thoughts here? Just because equities are so strong.
Yeah, I think the same pattern applies. If the data's hotter, if inflation's hotter, you're probably going to see a dip in stocks in the S&P. How deep or shallow that dip is going to be is anyone's guess. We might, if we're trading 5,600 tomorrow, we might get down to 5,580. And likewise on the other side, if it's weaker data, the market's going to start pushing for a September cut, and stocks are probably going to rally all the way through 56 if we're not through already, and it's going to keep going. So if you're trading it, if you're still trying to pick tops up here, it's a dangerous game. You need to wait for at least a confirmed top of at least a few sessions, if not a few days. Dip points, you've just got to keep drawing them, keep drawing those support points all the way up. As we break a new high, that becomes new support, and that's your dip points. If if you get the data coming your way and you want to buy a dip, just wait for that. But it's the same old story. Stocks. What stops stocks going higher? Not a lot at the moment.
Right. And so I was having one of our sessions, just so everybody knows, if you take a trader funding program assessment, you get a one-on-one session with me. And I did a one-on-one session yesterday with one of our traders, and we were talking about the equity markets, and we're strategizing about, he's been with us for a while, so we were strategizing more on how to pass the assessment, and kind of a little bit of trading tactics, but we were talking about the S&P and what's going to really mark a high, because at this stage in the game, this market is really threatening more of a blow off top than anything. I mean, if you look at just, let's look at the S&P technically. We go from one accelerated channel, you can see it in blue, one accelerated ascending channel to another accelerated ascending channel to another accelerated ascending channel. All that's doing is it's picking up an acceleration higher. So the only thing that's gonna turn this market at this stage in the game is if you start seeing weekly lows being taken out. Weekly lows, that means we close below last week's low. What was last week's low? Last week's low was 40, 45, 50. We close below that, or you have some sort of catalyst. Catalyst being whatever it is. I mean, war breaks out somewhere, one of our candidates, heaven forbid, drops dead, on the floor or something like that, and it creates some sort of volatility event. There has to be a catalyst out there that's going to drive this market lower, and maybe it's CPI tomorrow, and it could be maybe CPI comes in like, I don't know, 0.4 hotter than expected, and maybe that catches the attention of the market, because everybody would say, oh, there's no way the Fed is going to cut this year, maybe not even in next year, whatever the case may be. I'm just saying there has to be some sort of catalyst. If there isn't, everybody's still playing the FOMO game, and it's going to continue to grind higher until there are no more buyers. I mean, that's it. I mean, do you agree with that assessment at this point, Ryan?
Yeah, I think so. But I also think, and we've been discussing it here, Dale said it earlier, there is becoming a bit of divergence between stocks and the indices, the S&P versus the Dow and stuff. And I think that's where you're more seeing the fundamental differences. Yeah, tech stocks are out on their own. They're a bit like the yen, they're out in their own universe at the moment.
Good metaphor.
Sorry?
That's a good metaphor.
Yeah. So, this is Yes, the Dow is probably a stock market you want to watch for fundamentals. If you're starting to see weaker data, weaker housing market, weaker jobs, weaker PMIs, whatever, it's more likely to be reflective in that as being negative, the Dow being negative, than you're going to see in S&P. So we've got
Forex
this
gal
divergence.
says, yeah, Forex gal says, look at the transports. They're
Exactly.
probably weak.
You take all the different sectors. Get up one of those heat map sector maps that they you can look at, and see who is actually doing well and who's doing bad. And when you get in the how do we call it, street stocks, the bricks and mortar stocks, the real stocks, if they're not doing so well, then you need to watch those for your overall view of the economy, not your S&P stock and your tech stocks, because they're just painting a picture that's just fairyland at the moment.
But
Hey, Brian,
but look at the Nikkei.
yeah, Nikkei's the only foreign bourse. What about the DAX?
I mean, the DAX is sitting there. I mean, it's not really doing much, but it's kind of like everything else. But yeah, I mean, look at the Nikkei, just absolutely ripping balls right now.
Yeah, but why? It's not ripping balls because it's full of tech stocks. Although they are a big influence over there because they build in these TSMC plants and getting into the chips and everything like that. But you've also got an economy that's potentially growing. Wage rises, inflation's coming, rate hikes are coming. It's the ingredients for why investors want to get into a country because they see yield coming. And that's a reason why Nikkei's it's following, and B, because it's got the fundamentals growing behind it as to why it should go higher. It's not going higher because of easy government money and easy central bank money.
They're saying, Patrick's saying, and the government buys stocks.
Not anymore. They haven't bought stocks for since late last year.
All right, Patrick, you have to leave the room now. Hey, Ryan, I want to ask you, I don't understand it. I know that it's extreme, but what's the significance of the stock market being 200% of GDP in the US?
Yeah, what's the significance?
Yeah.
It shows the overvaluedness of it all.
It's never been that much of GDP. Twice the amount of GDP.
I mean, you got firms that have got the bigger market cap than some medium-sized countries.
I mean, that's a fact.
Yeah, the whole situation's bonkers. You want to talk about a catalyst. If some of those start going pop, well, there's your catalyst. But then you're talking Armageddon. But it just doesn't compute, does it? You take companies, Tesla, whoever, Nvidia, they're bigger than Greece, bigger than countries. How can you have stocks that are bigger than countries?
Yeah, it's pretty staggering. And can it last? Well, here's the question that I was asking yesterday. It's like, one of the things that I've learned just trading with the firm that I traded with, from 2017 to 2021 or 2016 to 2021, the questions that I learned to ask is, why not? Why can't it? Because the markets, as you've heard you've heard the old saying, markets can stay rational longer than you can remain solvent. That comes from, John Maynard Keynes, and that rings true in today's market more than anything. Like, things don't make sense. It's bonkers, but can it continue? And like I said earlier, it can, until there's something that breaks it. You're not in a position, nor am I, to break it. We are just simple followers of price at this stage, and we have to, just as crazy as it all is, and as it all sounds, we have to follow price. And that's, unfortunately, that's what the markets are telling us right now.
It looks like Nvidia is going to, it's kind of rallied more than it would if it was going to be a failing rally. So you were showing Nvidia.
Yeah,
Maybe
well,
that
I
means
still
new
think
highs.
Nvidia is at the boob top. Just
Okay.
just so you guys know,
I hope you're
I
right.
mean, I know it's up this morning, but we are at the boob top. The boob top is around.
78.6, I think we're at today's opening
Mm.
of the pullback.
Oh yeah, pre-market, I guess. Yeah,
Yeah,
probably. But I do think we're at the I call it
almost.
the boob top. Yeah, it's
Yeah,
you sign boobs and you mark a top. I bet you if you shorted Nvidia today and you open your eyes like 8 months from now, you're probably going to be really happy you did. The problem is I don't know if we go to 150
right,
first
right.
before, before dropping, that's the thing.
Yeah,
But I do think that if you shorted Nvidia today, and like I said, you closed your eyes and open them 6 months from now, I think you'd be happy you did. So I just don't know where the top is right at this moment in time. But that's kind of how I feel with that. Um, Now we do have about 5 more minutes before Dale takes over. And I did want to point out this is the big deal to me going into tomorrow. This is your 10-year and this is your ZNs, right? And you can actually see one of the things that I'm really, really and I think I pulled this up yesterday. Yeah, I did pull up the commitment of traders yesterday on the 10-year, and I was discussing it in the Morning Edge. And by the way, the Morning Edge show starts in about 45 minutes for ForexAnalytix subscribers. If you're a ForexAnalytix subscriber, you can see right up here when you're on your dashboard, you can actually see the webinar links, and you can click join, the join button. You can log right into the Morning Edge show. But I was showing the CFTC data on the 10-year, and how you still have a lot of shorts in the market. A lot of people do not believe that we can see a rally in notes,
treasuries.
bonds, you name it. And a break above this 111 level in the ZNs would be really bullish. And I guess if you match it up to TLT, Dale, that would be
Yeah,
the equivalent of TLT
right.
breaking 94,
Yeah,
roughly.
yeah.
That's a big windup right there. And it, yeah, and I mean, if that happens, if the dollar continues to follow yields, that is, in my opinion, a catalyst that could drive the euro back to 110. And I think the euro can make it all the way back up here to 110 if the 10-year starts to break down. I'm not saying that the euro is going to 120. I don't know what would drive that move at this point, but I think the dollar is at risk. That's what I'm looking at today. That's like I don't think it's going to happen today. We'll get the second day of the Humphrey Hawkins testimony, where Powell's going to be talking to, uh, he talked to the Senate yesterday. I believe. I have to go back and check. But anyway, it's day two. So it's going to be, I think it's going to be more of the same. He'll get some different questions. So he might let something slip up, but he's going to be talking to the House today. And so I don't think that's going to be the catalyst. I think it's going to be tomorrow's CPI if we see anything. But Dale, what are you looking at for the day?
I'm looking at what Jay Powell's going to do for a job after Trump is elected.
Do you think because you know what he's going to end up doing? He's going to end up cutting rates ahead of the election,
Yeah,
and it's going to
September.
be viewed as political, and then he's going to get fired, right?
I'm with you on the yield and dollar call. Like, so, I'd be fading dollar strength, and I do think we're going to get that breakout you're talking about. That was a very nasty shakeout in TLT, and it gave me pause. And I think it was just a move. I think K-Man talked about it, just being, end of quarter option expiration, but it looked ugly for about 3 days and has gotten it all back. So,
Yeah, yeah.
that
It's come right.
break, no, that break that you had, like, into the end of the month of June, uh, that to your left,
This one,
no further.
this one.
That, yeah,
Got it.
that was ugly. I mean, that made me question the bullish scenario, but it was just a shakeout move.
Yeah. All right. Well, Ryan, what are you looking at going into today?
Well, there's something really exciting going on. We're playing a game of who has the lowest range, euro sterling or dollar CAD. Dollar CAD's winning with a range of 15.2 pips. Euro sterling 13.8 pips. But no, in all seriousness, we got some moves. Dollar Mex is looking interesting. We're sitting right on the 50 fib, I think. Yeah, the 50 fib of the move up from May.
That'd be
That's
right
at
here.
1776 at the moment, so we're tapping that again. I'm keeping an eye on that 1740 level. That's my big old level. Got the 61.8 of that move as well at 47. So there's a bit of a zone down there, 1740. That's a big historical zone there. So I'm keeping an eye on that, and I'm keeping an eye on Aussie Kiwi as well. I added a couple more bits this morning. We're right on the top of a bit of a range here, 111.
Wow.
If we bust that, then we're probably off to the races, and we might be seeing a bit of a breakout from recent ranges.
Well, if
Mark
you're
Chandler all over that one before it rallied.
Yes, he actually he texted
He'll
me,
be here
or
tomorrow.
actually you're gonna have him tomorrow. He sent me a message just last week. He said, I'm still long this Aussie Kiwi, and yeah, he's caught it. Now, if you are a ForexAnalytix subscriber, then you know that there's some key developments that have just happened this morning in the Aussie Kiwi. And just keep in mind, this is the 618 retracement of the 2022 high to the 2022 low. We're right there. So big deal.
Nice move. And I have to tip my hat to Stelios when he was covering last week. He was talking about the short side of MEX much higher, looking for this pullback. He'd like the carry. So Stel, nice call. If you watch the recording, you'll hear it.
Yeah, I think this is last week with his daughter before she's shipped off to camp, so he's not with us this week. And by the way, K-Man is believed to be back tomorrow for those of you that missed him. And I just wanted to remind everybody to make sure you check out the Trader Funding Program. Remember, you get a one-on-one session with me if you take an assessment in the month of July. It's kind of a special thing because I think it works well for people that are going through an assessment and they want to kind of learn about what to expect and maybe some tips and tricks on how to pass an assessment. So
great offer.
All right, buddy.
All right. Thanks, Ryan. Thank you, Blake.
Thank you, Dale.
Have a good day. Have a great day, guys. Pavel Hala of spreadcharts.com. Welcome back to F.A.C.E. How you doing, Pavel?
Hi, Dale. Yeah, I'm doing fine. It's nice to hear you.
Yeah, good to have you back. What's on the menu?
Okay, so do you hear do you
Yes.
see my screen? Great.
Yes, got it. Your watch list.
Okay. So today I want to talk about commodities, but start with a broader picture because I think that the risk is building up in the broad market, in the stock market. That does not mean it is a wise strategy to short equities. I think it's pretty dumb because it's impossible to time the top with precision. But if you just open up the VIX term structure chart, this is the current term structure curve on VIX futures, and compare it with the 5-year and 15-year average. And remember, these averages are not over the entire 5 and 15 years, but these are averages at this or in this part of the year. So on July 9th, 5-year over the past 5 years, and July 9th over the past 15 years. So it takes, you can say, seasonality into account. And you can see that the current curve is pretty cheap. Given the geopolitical risks and the upcoming election, I think the VIX is cheap. And I also have another chart, because speaking about the elections, I have October VIX futures butterflies, which is the current year, the blue one, compared to previous two elections in 2020 and 2016. And I think about this chart as sort of a risk premium in the VIX futures with regard to the upcoming elections. You can see that in 2016, there was basically no risk premium. But in 2020, there was a significant risk premium in the market. And right now, we have drifted somewhat below that 2020 level. And you have to ask yourself if this is, if or the current risk premium is low or high. I think it's still cheap given the uncertainty about Biden's health and the uncertainty related to the case if Trump will not win. So what he will do? Is he gonna acknowledge the results of the election or not? Is there some repeat of January 6th? So all these uncertainties, I think, are not factored in the price, not just the butterflies, but the VIX structure itself. So I think there will be some kind of volatility event between now and the elections. And as I told you, I will speak about commodities, but I will start with rates. Everybody watch rates, and it's understandable. So here I have on the top sub chart, I have inverted $10 Treasury future, 10-year Treasury futures. So basically, the chart is correlated with the 10-year Treasury yield. And below, I have the price of Brent crude oil. And normally people think about it. Yeah, there is a relationship between the treasury yield and commodities, especially oil. That's normal. But normally people think that it's the bond market that affects the commodities. And I would say normally that's true. That's correct. But I can see a potential wild card where it will be the crude oil that will move the bond market, because I think there is a lot of, or there are many international players with a stake in the current elections. And it's not just Russia, it's also Saudi Arabia, China, Iran, and others. And I outlined this scenario even some time ago, I guess it was autumn last year, that these players will be interested in electing Trump instead of Biden. They do not like Trump. I think that would be misguided, but I simply think that they hate Biden and they want their candidate. Their preferred candidate is Trump, and they want to help him get elected. And the best way to do that is to hike the price of crude oil going into elections, and that in turn could move the bond market and crush the risk assets. So I would watch crude oil. I would watch gasoline, because crude oil is just an input, and it's the gasoline that's important to Americans at the pump. And I have no supporting data, or of course you can browse through the positioning, which is bullish in gasoline, seasonality is mixed, and so on. But I think there is a decent risk reward in this trade to go long gasoline and maybe speculate also in crude oil itself, and speculate on their price going up. Gasoline is just better because the risk reward is better. I think there is much more upside relatively in gasoline compared to crude oil. But yeah, that's my.
You really believe China would rather have Trump than Biden?
Yes, I think so,
And Iran?
because yes, I definitely think so, because
Oh,
speaking about Biden, Biden, as you probably know, it's just more about the people around Biden, the establishment. And I think what these players are interested in, it is that the people surrounding Biden, they have, if you deal with them, they have their own beliefs. They are receptive to beliefs, no matter what you think about those beliefs. But if you deal with Trump and people around Trump, these people are receptive to money, to trade deals, and this is kind of a leverage that I think is much more attractive to China or Iran and others,
okay.
rather than the circle around Biden. I'm not, I don't want to delve into politics because I would
Too
alienate
late.
half of listeners. I'm European, so I do not want to say that I don't care, because everybody should care about the US election results. But I would not be directly affected if you elect Biden or if you elect Trump.
Where are you, Pavel? In Europe.
I'm in Czech Republic, Central Europe.
Okay. All right.
So,
So Russia doesn't worry you.
kinda. I mean, it's not an immediate worry like for people in Baltics or in Poland.
Okay. Right.
But yeah, I understand that for the Eastern Europeans, Biden is a preferable candidate.
Yeah.
I get it, but
Yeah.
I don't want to delve into politics. I understand the
Okay.
point of view of people in the US, and especially people living in democratic cities. And personally, I've been into the US, and I would not want to live in democratic
Uh,
cities. And
All
just
right.
say,
So
let's say that.
how are they going to cut? I mean, there are many ways they could manipulate this to cut supply. Do you think it could be as radical as some type of incident in the Persian Gulf?
I don't know. Maybe I think there's no need for radical solutions. You can just, for example, the Saudis can ramp OSP for the US while slashing the OSPs into Asia. Iranians can start to store crude oil in tankers. Uh, these kind of actions, I
Okay.
think, are enough to send the price higher, because yes, there is some pain associated with that, but it's just temporary pain. And I think there is a
It's worth
decent
it.
payoff.
Yeah.
Yes.
Okay.
So
All
that's
right.
one
Very
idea.
interesting take. Because technically, don't you think it's pretty critical? I was looking at WTI that it holds like say the 78 to 80 level. Technically, uh, that it should be a well-supported area if your scenario does unfold. See that 80 area? Yeah.
Yeah, I mean, it's possible that the price can decline into this
Yeah.
consolidation between
Okay.
78, maybe 77 and 80. I think that's possible. But it will be much more bullish if the price stays above 79, as you say.
Yeah.
But yeah, we shall see. I mean, in the medium term, I'm much more bullish on gold and assets that would benefit from falling rates. But in the short term or coming into the elections, I think this is a risk we have to take into account. And I mean, I don't know if this plays out as expected. I'm just hearing everyone forecasting rate cuts
Lower.
and dropping rates and so on, crude lower. And this is something that has appealing risk reward. Maybe its chance of success is below 50%. I can, I
Yeah.
acknowledge that. But if oil breaks out, I think that would surprise many people, and that would send US markets, not just bonds, but also equities, much lower.
Okay.
So
Yeah.
that's crude oil, and I have two potential ways how to play this if you don't want to touch crude oil and the geopolitics associated with crude oil, and that's soybean oil and sugar. these are commodities that historically have positive correlation with oil, and they have their own tailwinds. Soybean oil have a slightly favorable seasonal trend going into autumn. It is incredibly.
Are they near the lows like the beans? I think are very close to making new lows for the move. So is bean oil, the crush? Okay, so is that bean oil right there?
This is bean oil. This is soybean oil. Simply because of the correlation with energy, with oil. Yes, you can see it's also much oversold, historically oversold. You can zoom out even further. Such periods where when the net positions were below 100,000. This is very, very oversold market. And
it's used for jet fuel now. They're using bean oil for jet fuel.
Really, I know it's used in making biodiesel, but I'm not familiar with.
It's a new breakthrough that they're going to start using it for jet fuel. So
yeah,
that's
it's
interesting.
nice to know.
And sugar is what, ethanol?
Yeah, sugar is ethanol, so that's used in biofuels.
And that's gotten crushed in the last 6 months, sugar, right? So it's really come down a lot.
Yes, that's true. It's very low. I can, just open up the sugar itself, the chart for sugar itself. And yeah, you're correct. Its price is down, but I think it's not catching a falling knife by now. It seems it kind of bottomed. So that's another thing I like about it. It's still, the positioning in sugar, it's still pretty appealing. If you take a look at the commitments of traders' data, it's not as extreme as in spring, but the positioning is still favorable. And these are my two favorite ways how to play that opportunity. Because you can be right, even though that geopolitical catalyst on oil won't play out. So you can still be right on soybean oil and sugar. And that's what I like about these two markets. And it's also possible to play this through intra-delivery spreads. We have some really nice looking signals that our machine learning model found some time ago. These trades are already mature, I would say, because the signals were valid in June. And now these spreads are looking very strong. And here is soybean oil, and I think no, there is no spread on sugar, but there is a long signal on white sugar. So these might be, potential ways how to play that. And yeah, I kind of like these two opportunities. If we get a geopolitical tailwind, good. If not, these trades can still play out favorably.
Okay, some interesting concepts you have there. Anything else you want to talk about these spreads, or anything else? If not, you could show people how they could reach you, and I know that you have a ability for people to try out your algo to check it out for free. You have a free version. You want to go there?
Sure. Well, maybe I would just say that one last thing, that I also like agricultural commodities in general. I'm long agricultural commodities, and because they are very, very incredibly very oversold.
Do they need a weak dollar to get going here, Pavel?
Yeah, previously I thought so, but I'm not so sure anymore. Because they don't need much. Some of them definitely, but in aggregate, I think they will, because they are I can observe that they are tightly correlated with rates, with yields to be precise. So if we get a rally in yields, I mean bonds going down, yields going up, that would be positive for the dollar, and I have no doubt it would be positive for the agricultural commodity. So I'm no longer sure that the dollar have to go down in order for agriculture to go up. Maybe they will be positively correlated from now on.
Okay,
So
interesting. All
yeah,
right, great. You always bring to the table, like Mandy is saying here in our community, that you give us things to think about and consider, and it's an interesting narrative that you brought us here today, Pavel. They always are, and I
yeah.
always look forward to
Thanks.
talking to
Thanks.
you. And this is very interesting, and things that make sense that people aren't even thinking about. And you have this sideways range in the WTI right now that we could get a breakout either way.
Mm-hmm.
This sideways range that we have there, and we could come out to the upside and rally above $100 and still not be in a bull market.
Definitely, yeah, I totally agree. I think that would catch many people off guard,
Yeah,
and yeah, and it reminds me of 2008 because during these late cycles, uh, energy rallies, and especially oil rallies, are common. So because that's
yep,
usually the last straw that breaks the camel's neck, or in this case, U.S. consumers' neck. So maybe the
yeah.
oil rally is necessary for the US to eventually slip into a recession. I don't know, but I cannot rule that out. And I like the sentiment. I like the geopolitical setup here. And, that's the reason I like oil here.
Mark Chandler in a prior interview said to me that every major recession the U.S. has been preceded by an oil shock.
Yeah, clearly. I totally
So
agree with that.
you
Yeah.
brought, you may want to look at that, but uh, it's interesting, and really appreciate it, my trading warrior brother. People that want to follow your work, which I think they should,
Sure. You
and
can go to
spread
uh,
trading normally is there's more risk control with spread trading than just outright positions. Do you agree with that?
yeah, that's true. I mean, that's usually true because the spreads
Yeah,
are
there are
more
exceptions.
sensitive. They are more sensitive to, if you mean spreads on physical commodities, they are more
Yeah,
sensitive to the underlying conditions in the physical market. That's normally beneficial because you filter out the, geopolitics and, the fact that bonds are rallying or falling. That doesn't have such a great impact on spreads. On the other hand, if you get a problem in the physical market, crop damage or something like that, spreads will squeeze much more than the underlying. So it's a double-edged sword, but if you are
okay.
interested in trading the physical commodity itself and filter out the macro and whatever, then the spreads are a great way to do that. But we are not focused just on spreads. We are doing commodities or even macro, and lately even cryptocurrencies. For example, we nailed the top in Bitcoin. I mean, the move lower. It was around here
Nice.
when we turned bearish. So because our platform has data also for cryptocurrencies that can be very useful. So you can check our blog and this video, which is unlocked video from our research. And so you can go to our homepage and sign up for our software, either for the free version or the premium version that has the research, the signals generated by our complex machine learning model, and some advanced stuff like some statistical charts and so on. So you can check that out.
Okay. Did you play hockey as a kid?
No, I played tennis.
Oh, okay. All right, just checking. A lot of great hockey players come from your homeland. All right,
That's true.
so
That's true.
you're just a great analyst. So, it's probably fewer of those than there are hockey players in Czechoslovakia. So thank you so much, Pavel.
Yeah,
Really
thank you, Dale.
appreciate it. Yeah, much success to you and your subscribers in the upcoming months. And you and I will talk in the fall when all of this will be going down.
Yeah, I'm looking forward to it. Definitely.
All right, Pavel, holla everybody at spreadcharts.com on X and check out his work. And that's going to be a wrap. Everyone have a excellent day and make the most of it. And don't just count your pips, count your blessings. You could join the team in 20 minutes on the morning edge. And the team and I will see you tomorrow to trade the CPI live. Adios, everyone. And thanks again, Pavel. Appreciate
Thank
it.
you. Thank you, Dale. Bye.
Bye-bye. You're welcome, everyone.